All right, we've got the other half of Next Gen, Alex Coffey, joining us, co-host of Next Gen and senior equities contributor, to set up some of the broader action for today and another earnings picture. Let's start out with the latest with regard to tariffs. President Trump kicking off this week. It seems like the beginning of every week we've got a new big potential needle mover. Let's start out with what is the latest on this front. It seems like a targeted sector, if you will, but a high tariff.
Yeah, well, boarding Air Force One, perhaps actually maybe on Air Force One. I just have read the stories. Donald Trump basically said to expect 25% on all imports of steel and aluminum to be announced soon. That includes close trading partners like Canada and Mexico, as you said. Canada, the largest when it comes to aluminum. Mexico, second largest. Aluminum, far more of an imported product than steel, but both are, particularly different grades of steel that are needed for different things within manufacturing. More of that high-end steel is often imported. But also, and this is the piece that I think is more overlooked within this report, is that there also are now plans to announce reciprocal tariffs on countries that tax U.S. imports. While this will not take place immediately, it's expected to be basically targeting the EU. So something to watch develop perhaps over the next few days. Now, markets' reaction to this, maybe we're starting to get a little bit of tariff fatigue when it comes to the market's reaction. For those who watched the futures open, there was a gap down of what's called just shy of 1% right at the open. But it lasted all of a handful of minutes. There really was very little opportunity to jump on board the train once it started moving. And you can see now equity futures near session highs or pre-session highs. But the dip was bought almost immediately, and it worked its way higher throughout the evening.
I wonder if part of this is because when you think about the expectation around this tariff, Canada and Mexico, some of the biggest exporters of steel and aluminum, and we know that some time was bought there when the initial announcement of tariffs rattled the markets, and there's kind of this reprieve period. I wonder if that's what the market reaction is like. In other words, if there is this 25% or when there is this 25% announcement of tariffs today, it's clearly not set to be applied likely to Canada and Mexico. Is that your read-through on this, Alex?
I think that there's two possible read-throughs, Diane. First one is something along the lines of what you're saying, which is there may be carve-outs for some of these close trading partners, or perhaps these are more bark than bite in the sense that maybe these are more leverage for negotiation as opposed to actual plan. But, I don't know that that's going to be ultimately the smartest path to make investment decisions on. Donald Trump has talked about, tariffs being a big part of his trade policy going back to 2016. It does seem that this is something that will happen. Whether it's 25% and whether it's Canada or Mexico, time will tell. But it does seem to be something that is relatively serious. So we could argue about whether or not that's a good idea or a bad idea. But I think what's more productive would be, what is the impact of that? And I think this is where I get the answer as to, why would equity futures go higher on something that could be net negative growth for the U.S. And the answer that I constantly come to is, yeah, maybe it's going to dampen growth in the U.S., but it's probably going to have a far greater impact on these countries that are going to be actually facing these tariffs. They're all huge net exporters to the U.S., so reciprocal tariffs back to us are not going to necessarily have the same impact. And in the end, they need the U.S. as a buyer. So in some ways, it's tough to say, but when the U.S. says jump, most of these countries say how high.
It's an excellent point. We've already seen some of that with, even the early rounds of announcing tariffs and at least buying time to negotiate. All right, let's take a look at one of the earnings that you're paying attention to today. Onsemi out with its latest quarterly results. Stock under pressure in the pre-market. Take us through some of these numbers, Alex.
Yeah, disappointing numbers out of Onsemi. Fourth quarter unadjusted EPS at 88 cents is a massive miss versus the 128 a year ago. But when you look at adjusted EPS and you can see those estimates versus, something that's maybe a little bit more comparable, it's just a slight miss, 95 cents versus the 97 cents that was expected. Revenue slightly softer as well, 1.72 billion. Street was looking for just over 1.76 billion. And then they guided really, kind of on the low end here. And I think that's probably why you see the stock have that sharp move lower, although it has seen some pre-market buying take place off those lows. They guide for first quarter revenue between 1.35 billion and 1.45 billion. Street midpoint was closer to 1.7. For their estimate. And then on the adjusted EPS front, the midpoint of the street forecast was nearly 90 cents. Onsemi's forecast has a midpoint of 50 cents and a range of 45 to 55 cents. So initial drop was close to 8 to 10%. Where you see the stock now, let's call it closer to 5%, maybe slightly below 5%. To the downside here. So still a negative reaction, but it has come off the lows relatively quickly.
Yeah, but the adjusted EPS forecast is, roughly half, at least on the low end of what the expectation was. So you can see why that's getting hit. All right, let's talk about the broader setup for this week. We've got a lot to chew on both the economic calendar and the earnings calendar. Seems like a very well-rounded earnings calendar. But take us through some of the things that you think the market will chew on this week in terms of, I know we've got Powell speaking a couple times this week, but what else should we be on the lookout for, Alex?
Yeah, the nice thing is, while they're maybe not the biggest of companies, it's a very diverse set of companies in different industries throughout this week from an earnings standpoint. You guys mentioned McDonald's. Obviously, we just talked Onsemi that have already reported for the week. While there's not really much to expect in terms of big names after the close today, tomorrow morning you get Shopify and Coca-Cola. You get Supermicro tomorrow afternoon alongside DoorDash and Lyft. CVS Wednesday morning, Reddit and AppLovin on Wednesday afternoon, Datadog, John Deere, Crocs, Coinbase, Twilio, DraftKings, Applied Material, Airbnb all on Thursday, and then Moderna will round things out on Friday morning. So again, a little bit of something for everyone throughout the week. Maybe not the first name on their watch list, but many names, many industries. As far as the economic data calendar, it's a relatively evenly distributed week in terms of busyness throughout the week. You're going to have a two-day event with Jerome Powell speaking to Congress Tuesday and Wednesday, CPI on Wednesday. Jobless claims PPI Thursday, retail sales on Friday. So kind of the calm before the storm here today.
All right, indeed, calm before the storm. Alex Coffey, thanks a ton for the setup for the week and what's at stake with regard to the tariffs.